What's up, guys? It's January 24th, 2024. Pretty good day for the Bears. They got a rejection at highs. It looks nasty on the daily chart for them. Got a breakout of a failed breakout. Bulls tried to break out in the morning and then ultimately failed, returning back into yesterday's range. Yesterday we had a bit of a wedge bottom, and then we sold off into the previous day's high, 2 days ago's high. Today we had a gap up above that. So a big gap up with no continuation. That's pretty bad for the Bulls. They're gapping up with a breakout. They're definitely going to want to see continuation right away. The first 6 bars of the day are selling hard. There's more bear bars. You see a lot more selling pressure than buying pressure. There's 2 bull bars here, but they look more like pullbacks. And then the Bulls bounce off the 50% level for a few legs up. The legs that we can see, though, are more of a implied legs, so I'll just draw them out in a second. There's a 50% level from the gap up. Here's the low, high, 50%. They bounce from, I was counting these legs like this, leg 1, pull back, leg 2, pull back, leg 3, pull back, and it got parabolic. This bar also raced up. I took that as a scalp. This bar raced up, but with really bad follow through, almost creating a higher high double top. And Bears got 2 legs down here, leg 1, leg 2. And then it could also be a leg 1, pull back, leg 2 into the EMA. This was testing the breakout point here. For a good bull trend, I don't think bulls would want to see this or this. That's just not good for a bull trend. There's a lot of selling for 6 bars a day. People are going to be looking at that. Machines are going to be looking at the first 6 bars of the day. The EMA was sloping up more steeply, and then this pullback happened and it started to flatten out. Here we can see another 3 legs done by the bulls, leg 1, pull back, leg 2, pull back, leg 3. And bulls try and make a new high for the day, but have an indecision candle right above the high. So that's also bad. You want to see a nice strong close. They have this close here, but no follow through, and it's a small body. If we were at highs, I would definitely want to see a candle like this, a candle like this. But this is already telling us something's wrong. There's so much selling within this trend. It kind of created a wedge top. Here's one wedge top. Here's another wedge top. So there's multiple ways to draw it, but the idea is that the bulls are getting weaker at highs. We are overall trading above last week's range, so that's not too good for them. That these bars are getting put in because the bulls would want to sell. However, for the Bears, they can see these, and Bears are making money within a really broad bull channel. Here's that channel. I can draw it in 2 seconds. There's the channel. Kind of overshoots right here, or you could just pull it right there and then delete this line. So if we see this as a channel, gap up, big spike, pull back, and we channel, we get to the high of the channel and we sell off to the low, and then we just kind of oscillate. It was a pretty slow trend, really deep pullbacks for the bulls. Not looking good. Already in my mind, something was up with the bull trend. I saw this bar and I was like, yeah, this is gonna get bearish, because at least to the recent low, today's low would be a good target for the Bears, and then yesterday's low, and then yesterday's 50% mark, and then the low of yesterday. So here we see a really strong rejection. Leg 1, leg 2, deep pullback, creating a new leg 1, leg 2, pullback. This is the 3rd leg. The channel is getting wider too. So what I mean by that is here, and you can see it's kind of getting wider, and the wider the channel gets, the weaker the channel gets. We do want to see a tight bear channel, but it was expanding. And if you were counting legs, it would be hard because this is just a spike in channel. That's part of the market cycle, spike, or it's a breakout, channel, trend, breakout. Here we see the breakout, and then we start to channel, a spike in channel, whatever you want to call it. But bulls are making money. I don't think this leg here did not help the Bears, because bulls started to get deep pullbacks the closer we got to yesterday's high. There was a gap up, so people could be thinking the day's still bullish and this is a deep pullback, then they want to return to at least here. However, that didn't happen, and the Bears get a steep channel with multiple legs down. I'm going to delete these lines so I can draw the leg 1, leg 2 moves. Leg 1, leg 2. Here's that measurement. And then we pull it again from a different perspective, here to here. That's met. This is a lot of overlap. It's not really good price action for the bears to have a strong bear trend. There's that range bound, and then since the market's kind of overlapping, and it's more like right here, that's something like this. We can say the market trended, went into a range, broke out, pulled back, and made a new low. There's multiple ways you can see this. They all kind of lead to the same answer, to get short. Trend lines. Here are the trend lines. I know you guys can see the gaps by now. Here's a gap. I could draw them in though, actually. Here's the gap because I noticed there are some new viewers watching, so I appreciate that. These are gaps and they show strength. They show bear strength here, but you can also see how the gaps are kind of getting smaller as the bulls are getting stronger. So that's not good. But then at the end of the day, they still made a new low. So these are the gaps. That was very loosely drawn. I know you guys can see them with the trend lines. 4 gaps, it's not a long. I mean, you can't scalp long into the EMA, but if you were to scalp this long here, like let's say you get long into the EMA, are you going to buy this and then buy lower? If you're going to do that, I guess there's no problem with that. However, if you're a new trader, I think it's better to trade with the trend. It's just safer. I've limited myself to only trading with the trend from now on. If I do scalp, I just scalp 1 point, maybe even 2 ticks. But after the bulls make money here, I think this is a better one because we are trading right above yesterday's high, kind of like a base. This candle acted as an exhaustion. It was climactic, and it kind of sold, it bounced, it sold, it bounced, and it just kind of shut down like that. Then bulls get another pullback into the EMA, and they sell. So it was two-sided trading today. Range day with more bearish price action. We were overall trading at range highs. Not good follow through for the bears. Excuse me, not good follow through for the bulls. They were very close to this measured move. I was actually long. I held my long through this candle because I was hoping it would bounce and they would tag 940, and 940 lines up to be around the measured move. See, 940.75. So that was my long PT. But I mean, as soon as I saw this breakout, I just flipped to short because look how much overlap we have here. This is range. Although we traded higher, I mean, the bulls made high. How do I say this? The bulls were buying more than the bears. It's still a range-bound price action right here. I'm gonna delete this. So I saw this as a good breakout, and I wanted to get short quickly just in case it plunged. But this bar also told me there's follow through, so I held. If this was a bull bar, I just would have got out because I pretty much went short. This could become a bull trap, and bears get trapped and go. So I get short on the EMA, and I see this, so I hold. And I just hold all the way up until I got out on this bar, and then I shorted again here and here. I was scalping these 2 bars, and I caught it quickly because we were trading around yesterday's high. Yesterday's high was my PT to begin with. So it's a pretty good day for the bulls. Excuse me, it's a pretty good day for the bears. We've had so much bullish price action, I'm getting confused. So not good for the bulls at range highs. This is looking nasty. This is a failed breakout, push up, and a sell down for the bears. Great for the bears. And look at the 45-minute chart. The candles are growing bigger with less and less overlap. And we closed at lows. They closed below the EMA, which the last time that happened was, what day is that? January 18th. So last week, maybe 2 weeks ago. But we've been trending a lot since then. So this is the first close below the EMA. It'll be interesting to see if they buy the close, or is this going to be a reversal back into last week's range. We have about, let me see how many bars to the left. This is the last time the EMA was touched, so I go from this bar over to this bar. 39 bars, 6 days, 39 bars on the 45-minute chart. Brook says when there's 20 bars to the left of the EMA, the first touch should be a good buy. However, the price position is kind of sketching me out, so I'm definitely going to wait for price to confirm this on the 5-minute chart before I just buy randomly. But that is an Brook setup, that when we have 20 bars to the left, the first pullback to the EMA is usually a good trade for at least a test of the recent high. Just not sure how it's going to play out on the bigger time frames. Price action is fractal, so it should work the same. But I'm just getting kind of exhaustion vibes. Big gap up. These were big. So it'll be interesting to see what happens. Thank you for hitting the follow button and always watching these videos, dropping comments. You guys are really helping me out. I appreciate the support. I hope you guys are studying. The Albrooks course is great to just keep looking over. It grows with you as a trader. If you're a new trader, check out these videos. They're all based off Albrooks' teaching of price action. I don't use indicators except for the 20 EMA and the 40. This is also the 20 EMA, but it's the 45-minute EMA on the 5-minute chart. So this EMA is the one we see right here. I can make them green after this video. There's a little bit more continuity. This PT never got hit. And I do remember in ranges, sometimes PTs can just end up a little more shallow than usual. So it'll be interesting to see. I mean, we're having good range days. When I say range, I don't mean like this. I just mean like actual range, like price expansion, I guess. Really quick to talk about the market cycle. The market cycle starts out from a breakout, channel, range, breakout. So just check it out. Here is the market cycle right here. We have a breakout, and then we go range bound. So we break out, channel, range bound, breakout, channel, and then this is also a range, and then we break out and start channeling back. So it'll be interesting to see if we get a range bound day. Maybe we pause on the EMA. I remember last time we approached the EMA, so maybe we can expect some price action like that, some indecision, some weak bars, and then the markets will decide on Friday. We're coming up close to the end of the month. Almost the first month of the year is over for trading. Hope you guys are doing good. My account's slowly coming back to life, very slowly. I'm going to take it easy. Hit the follow button. I drop these videos every day at 3 p.m. I hope you guys are learning and using your stop loss. Thank you for your support. Have a good night, everybody. I will talk to you tomorrow. Also, have a good weekend because I think it's going to be Thursday, Friday. I can't remember. Have a good day, guys. I'll talk to you guys later. Thank you. Bye.